if you were to say, well, do I want to invest in a technology? Solana and Cardano and ETH are competing with each other in the technology realm. But in essence, they're private equities with teams, and it's like private venture capital. I think that the industry would benefit if the SEC and the CFTC put out clear guidance as to how you qualify as a digital commodity. Most of them are non-compliant right now, but Uber and Airbnb were non-compliant too, right? Like Airbnb was like illegal in half the places they operate. And I think what's important is to give people a strategy to save their money. When I was growing up, my family wasn't wealthy. What we had was a savings account, and the savings account yielded 6% interest. And now savings accounts don't yield any interest. And so if you're taking your paycheck and your savings every single month and you're saving them in currency, you're probably going to see your life savings dwindle away. So I'm an advocate of Bitcoin primarily because people need a technology to save their life's work.
Welcome back, everybody, to Altcoin Daily. You are going to love our current interview guest, the CEO and founder of MicroStrategy, the new Bitcoin Jesus. This man is a blue chip in the space. Michael Saylor, how are you doing today?
I'm awesome. Thank you. Thanks for having me.
Thank you so much for coming on. Let's jump right into it. Half of these questions are sourced from our audience. These are things people want to know. But first question, let's just start off big picture. Michael, I want to be sold on Bitcoin. Give us your best pitch as to why someone with no Bitcoin should buy some Bitcoin today.
I think we're living in a very uncertain world right now, and there's a lot of political uncertainty with regard to politics, trade policy, labor policy, manufacturing policy. So if you're considering investing in a company, the question you have to struggle with is, will the company be impacted by tariffs or trade policy or tax policy or labor policy or manufacturing policy or a war or a famine? And so that's the first uncertainty. The second uncertainty we have today is monetary uncertainty. We see a lot of countries with their currencies collapsing. In Argentina, they just implemented some capital controls limiting the amount of US dollars that companies are allowed to hold. In Zimbabwe, they're dollarizing. Their currency has literally collapsed to nothing. And so if you're holding a currency or you're holding a company or a bond that generates cash flows in anything other than the dollar, you have a massive amount of uncertainty and risk. If we look at the last 12 months, the euro has weakened against the dollar, the pound has weakened against the dollar, the yen has weakened against the dollar, the Turkish lira has weakened against the dollar. In fact, just about every currency in the world is collapsing against the dollar, anywhere from 10 to 20 to 30%. And in Turkey, it's about 90% in 12 months. So there's a lot of monetary uncertainty to go along with that political and that commercial uncertainty. We call the two things together stagflation. You've got a stagnating economy. You've got an inflating money supply, which means that your currencies are buying less. So if you're any individual and you're looking out over the course of a decade and you have any capital that you wish to preserve, or you're generating cash flow from your job, the question is, what do you do to insulate yourself from stagflation? And if you rifle through the list of options, you can invest in companies, but which company? If you invest in, there's no company in Zimbabwe that'll save you. So I guess if you X out all the international companies and you invest in domestic companies in the country where you live, the question then is, do you actually know enough to handicap their performance? 98% of the companies are actually not monopolies, which means that they're getting eaten by Google, Apple, Amazon, Facebook. So if you're buying a non-monopoly company, it's risky for all sorts of reasons. If the company has employees, it's risky because of employment taxes and labor policy and unionization. If the company manufactures things and moves them across borders, it's risky because you end up with tariff barriers. It may be If you manufactured great stuff in China, you can't bring it to the US. Maybe it gets banned. So if you're trying to save your capital by investing in companies, you take on all sorts of corporate risk. If you're trying to preserve your capital by buying bonds, bonds are currency derivatives. They're valued based on cash flows. So if the dollar supply increases by 15% a year, you have to discount the bond cash flows by 15% a year. That means that every 5 years or so, they're worth half as much. If you're holding the cash itself, that's obviously a currency derivative. It's collapsing in value. I think last I checked, real estate in Florida has escalated in price 500x over 90 years. 500x. In 100 years, it'll escalate 1,000x, which means that your currency will lose 99.9% of its value against property, scarce desirable property over 100 years. That's assuming about a 7% monetary inflation rate. It looks like the US is running 15 to 20% monetary inflation rate. You can keep track of the strength of every other currency. So if the Great British Pound lost 13% against the dollar, then you're up to 33% inflation rate. And of course, with Turkish lira, you're much higher inflation rate. So a person's got to figure out how they're going to store their life savings. And if I'm not going to hold it in a currency, and even if I hold it in a currency, not only do I have the inflation risk, I have the counterparty risk. The banks will actually freeze your funds if you live outside the US. Banks are freezing people's funds everywhere in the world right now. In the US, perhaps your funds won't be frozen. You'll just have the currency collapse. So there's a risk with currencies. There's the obvious risk with bonds. There's a risk with stocks. And that takes you to property and collectibles. So maybe you collect Rolexes. A lot of people are doing that. A lot of people, you can see what people are doing in this macroeconomic environment. They're buying watches. They're buying luxury cars. They're buying real estate. If you look over the past 2 years, the money supply expanded by 40%. Single family homes in the US increased in price by 40%. So it looks in the near term over 2 years like single family homes are a pretty good inflation hedge. Bitcoin's performed better than single family homes in that time frame. But now we're stuck with this issue of, well, are single family homes an inflation hedge over a decade? And the challenge there is that as the price of homes go up, then there's an incentive for home builders to build more homes. So commodities, they have an appeal, but if you can produce more of a commodity, then if I increase the price by a factor of 10, I increase the incentive to build that thing by a factor of 10. So silver, gold, lumber, oil, homes, real estate in general, they're all subject to supply demand elasticity. And when the demand increases, the supply is going to increase. That's why a lot of people they actually prefer branded items controlled by monopolies. I think they probably almost believe that Ferrari and Rolex are more reliable. They'll keep the supply capped. Like it's not likely that a random suburban ranch house in middle America will have a capped supply because there's no single monopoly or brand organized or brand controller to keep that supply from getting out of control. So the general strategy when you're staring at inflation is I want to acquire scarce desirable property that I can hold for a long period of time. If I'm going to hold it for a long period of time, that means I got to be able to afford to maintain it. If you buy a really nice beach house in Palm Beach, you find that you have a 2% of your property tax. So in a decade, you have to come up with 20% of the purchase price to maintain it. Then you probably got to come up with another 1 or 2% per year to pay for wear and tear, hurricane insurance, electricity, repainting, whatever there might be. So if you take 4% a year of the purchase price, that means that you have to come up with 40% of the purchase price over a decade to maintain it. Bitcoin's not going to cost you 40% of its purchase price to hold it for a decade. So the maintenance cost on digital property is lower than the maintenance cost on physical property. The scarcity on a digital commodity, well, that's a function of the protocol and the integrity of the protocol. So if I create a product like Dogecoin and I know I'm going to print more Dogecoin every year, right? It's not quite 5% inflation a year, but it's an inflating supply. Well, then you don't have a hard cap. You've got an increasing supply. It'll continue to increase in supply forever. That's an uncertainty. If a small group of people can change the protocol, that's another uncertainty. The reason that we don't trust stocks as money over 100 years is because the board of directors and the CEO can change the supply of the stock. So Apple might be a good company, but if the CEO of Apple changes, the new CEO might double the supply of the stock. And so it doesn't necessarily make a good currency or a good money over the long term. So I think in short, commodities are increasing in price right now. Oil, wheat, soybeans, natural gas, all of those have surged in the past 12 months. You'd like to hold a commodity that you can hold forever, that it has a supply that is inelastic to the demand. It's kind of hard to dollar cost average into a skyscraper, right? I mean, the average person can't buy $387 a month worth of a skyscraper. So it doesn't quite work. You can't buy $200 a month worth of the New England Patriots either. So certain things that look like long-term trophy assets don't work for the average person. You can't stockpile oil for a decade either. I know, I thought about it, when oil got to $0 a barrel, there was a point when it was free. So why wouldn't you just go and get $1 billion worth of free oil, right? 1 billion barrels of it, because you would have made a fortune if you could have, but the average person can't stockpile oil. You couldn't take delivery of. So at the end of the day, the issue is most things you can buy are currency derivatives, and currency derivatives are correlated to the strength of the currency. All currencies are collapsing. International currencies much faster than the United States dollar, but the United States dollar is also collapsing. So I have to find property which is not correlated to currency. I need it to be scarce. I need it to be desirable. I need to be able to afford to hold it for a decade, maybe hold it for 20, 30, 40 years. And I want something that's globally desirable, ideal. And the ideal property is something that a person more affluent than me, more intelligent than me will want from me in a decade. So the case for Bitcoin is it's scarce, desirable property. It's not a currency derivative. It's not a security. It's beyond the reach of a company, a nation state, an agency. You can hold it and you can give it to your children or your children's children. You can take custody of it and you don't have to trust a counterparty. And I think we can see, especially this month, the risk of counterparties is great. If you hold gold in a vault and you're Russia, your gold can be seized. If you have cash in a bank account in Argentina this week, your cash is locked up. If you had Bitcoin with a counterparty like Voyager or Celsius, they might very well block you from withdrawing it. So Bitcoin is desirable because it's portable, it's global, it's scarce, and you can duck a counterparty you don't trust. You can transfer it to a different counterparty, or you can take personal custody. And that's why it's a useful asset right now, and it ought to be part of people's portfolios. And I can't think of anything better, right? I mean, there are other things you can own. Other assets. You can own Apple stock, you can own Google, you can own a building in Los Angeles, and you can own the New England Patriots. Well, you can't, right? I can't, right? But the things that you could own, they're challenging to own, they're expensive to maintain, they're not necessarily portable and universally desirable around the world. And in many cases, you may not be able to take personal custody of it. We got a phrase, not your keys, not your coin in the Bitcoin world. But, if you own a building in Moscow, maybe you don't own the building, if the mayor of Moscow turns against you. And if you have a yacht in the south of France and you're Russian, maybe you don't own the yacht. And, if you have granaries in the Ukraine and a war breaks out, maybe you don't own a farm. And so most things, they live in a political domain or in a physical domain where your ownership rights are questionable. And you have to at least discount them with some risk, depending upon your citizenship and your own location, and then the type of entity you are. I think Bitcoin, it appeals because it is the purest form of property or ownership that the human race has yet to divine. And that's why I think it's valuable in a portfolio.
Very well said. And one of the things I love about interviews you've given in the past is your conviction for the long-term viability of Bitcoin. So speaking of beach houses and single family homes, would you say now that Bitcoin is back at $20,000 that it's still a good idea for you personally to mortgage a home to be able to buy one full Bitcoin for the long-term viability of your future?
I think that the mortgage issue is a function of the mortgage rates you can get. So if you roll the clock back a year, the 30-year mortgage rates were 275 basis points. And so I would say a year ago, if you actually had unmortgaged real estate of any sort and you had equity in the home, then it makes sense to draw down that mortgage, because that's in essence capital that's good for 30 years. That's less than 3% interest. And we know that the inflation rate, the CPI inflation rate, is running 8%, while those mortgages are 2.75%. So if the actual monetary inflation rate is in excess of the mortgage rate, and if you can afford to hold that duration, if you don't need the money for 3, 4, 5, 6 years, then you should take the mortgage. Now, once you take the mortgage, I would say it would make sense to buy a lot of things with it, right? Buy a car with it if you need a car. If you have a portfolio of assets that you want to hold and you can borrow money at 2.75% interest, I think any portfolio of scarce desirable assets makes sense to hold with a 2.75% mortgage. Now, if you had asked me the question today, well, now mortgages are 575 basis points. So I suppose the negative is the 30-year mortgage rate has doubled. The positive is Bitcoin is less expensive. So I think the Bitcoin looks less risky when it's trading around the 4-year simple moving average. So that's a plus. I think the mortgage looks more risky because the cost of capital is doubled. And so, I think there's a point. Would I borrow money at 5 or 6%? Well, if it's 30 years and it's mark-to-market money, and I thought that, and I had passion for spending it on something, I would definitely borrow the money to maintain a lifestyle if that's what you wanted to do at that rate. I think it's no brainer that you would rather be holding a 30-year mortgage than holding any other kind of debt. For example, you probably would be better off to borrow money at 500 basis points in order to pay off your credit card debt. And you'd definitely be better off to pay off any margin loan, because those things are much more expensive, either in interest rates or they're much riskier.
Excellent. All right. Thinking about the future, obviously you're bullish on Bitcoin. I don't know if, I think your price prediction is pretty up there the more time goes by. But, thinking about the average person, how much Bitcoin do you think the average person needs to accumulate to be considered wealthy in the future?
I haven't really thought about that. I'm not sure what the definition of wealthy would be. I think that Bitcoin is a good thing to buy and accumulate. So as a general rule, I think that it ought to be part of someone's long-term portfolio. I'm not going to define wealthy. It's like, that's another topic. And I don't really think it's necessary. I think what's important is to give people a strategy to save their money. When I was growing up, my family wasn't wealthy. My father was a non-commissioned officer, a sergeant in the Air Force. What we had was a savings account, and the savings account yielded 6% interest. And now savings account don't yield any interest. And so if you're taking your paycheck and your savings every single month and you're saving them in currency, you're probably going to see your life savings dwindle away. So I'm an advocate of Bitcoin primarily because people need a technology to save their life's work or to save their assets at any level, any scale.
It seems to me, and correct me if I'm wrong or if you have a different opinion, but it seems to me that crypto and not just Bitcoin is, seeping into the mainstream in a big way. Do you feel pressured to stay Bitcoin only when we're talking about things that aren't for the use case of Bitcoin? So we're not talking about the use case of money or store value, but when crypto is seeping into other places in the mainstream, what are your thoughts?
Well, I think that Bitcoin is the first and the greatest and perhaps the only digital commodity. And a digital commodity means not a security. It means not without an issuer. So in a world where we're going through a digital transformation, you want a digital commodity to serve as the base layer. Because if I can put billions of dollars into a digital commodity on a layer 1, then I can move it on a layer 2 or layer 3 or layer 4 at the speed of light, friction free, and I can store the money for 100 years. So there clearly is a benefit to having a layer 1 digital commodity. Now, as for the rest of the world's full of securities and the world's full of companies. For example, is there a place for Apple Computer? It's people in the crypto world seem to think that the only place there's technology that's relevant is crypto, right? They think that all the software engineers went into crypto. They didn't. Right? There's software engineers working for IBM, and there's software engineers working for General Electric, and there's software engineers at Apple Computer and Google and Facebook and Amazon and the like. So of course, I think there's a place for software engineering and technology in Apple and Google and Amazon and JP Morgan, banks and governments. There's 100,000 of them. And the crypto world in general has been focused upon crypto exchanges, DeFi, tokens, crypto securities, cryptocurrencies, stable coins. That's one part of the technology world. And it's an embryonic part. The difference between the technology and the non-crypto market, like the technology that Apple's using, and the technology in the crypto market, is that Apple's technology is sitting generally in a regulatory zone where there's less murkiness. There's not a massive debate about whether Apple can add a certain feature to the iPhone. 98% of what Apple does is not that controversial, 2% is. On the other hand, in the crypto world, about 75% of what they do is controversial. So there's a lot of controversy and there's a lot of uncertainty and a lot of murkiness in crypto, which makes it very, very high risk and more like it's appropriate for venture capitalists generally, and it's a speculation. And it'll continue to be that way until we lay down clear lines about rules for crypto exchanges, what's compliant, rules for cryptocurrencies, what's a stable coin, rules for crypto securities. What's the disclosure required on a crypto security that's got an issuer, right? We don't really have those rules. There's a lot of controversy and uncertainty about what they will be. So if you want to invest in technology, right, invest, right? And by the way, when I talk about Bitcoin, I'm talking about saving. I'm actually converting money, a currency, into a commodity. I don't see, if you said to me, what are the other commodities that I might choose in lieu of Bitcoin? Gold, lumber, land, real estate, right? Oil, natural gas fields, right? Those are commodities in lieu of Bitcoin. That's what it competes with. If you were to say, well, do I want to invest in a technology? Well, what's Solana and Cardano and ETH are competing with each other in the technology realm, but in essence, they're private equities with teams, and it's like private venture capital. Whereas Google, Apple, and Facebook are competing with each other in their public equities, also with teams. And that's public tech investment. So if I had $1 billion of capital and my job was to invest in tech equities, I would be sifting between Apple and Google and Facebook. And if I had $1 billion of venture capital and I was a crypto VC fund and my limited partners wanted me to invest in private entities, high growth entities, the like, that was my mission, then I would be sifting through the other cryptos because I'm a VC. And if I'm a public company and I want to adopt a treasury reserve asset strategy, in lieu of what are my choices? Sovereign debt. I can hold 30-year treasuries or 2-year treasuries. So I can either do that, or I can adopt a treasury reserve strategy where I buy gold and I just buy 500 million worth of gold, or I can adopt Bitcoin, right? In order to adopt something as a treasury reserve, it needs to be a commodity, not a security. And there's a couple of reasons for that. One of them is a technical legal reason. A public company can't hold more than 40% of its net assets in securities. So like if I had $100 million, I couldn't buy more than 40 million worth of a security, including like an ETF, Apple stock, the NASDAQ index, the S&P index. I couldn't spend more than 40% of it. If I went beyond that, I would trip, I think, the SEC 40 Act, and I become an SEC 40 financial company. And now I've got to go through I've got to transform the business. And when that happens, you lose the ability to operate the rest of the business. So it's pretty catastrophic, right? So there's a pretty good reason why you want it to be a commodity. The second reason is you don't want an issuer. If there's an issuer, then that means there's a management team, and then it's a security. And if it's a security, it's subject to SEC rules. And then you have all sorts of securities liabilities about what you can say, what you can do, how you can handle it. Now, as a general rule, most bonds are securities, and most equities are securities, and private companies are securities. It turns out that sovereign debt of the United States is a carve out because the United States issued it, and that gets an exemption and is treated as a commodity, not as a security, right? Don't ask me why. I wasn't around when they made the decision, but you can see for that reason, it really depends on what entity you are, right? Are you a venture capitalist? Are you a public company tech investor? Are you a macroeconomic investor? Or are you a saver? Right? And then you would choose the assets accordingly.
Let me ask you about that, how it relates to Ethereum, because Senator Loomis credits you as being pivotal in the Loomis-Gillibrand Responsible Financial Innovations Act. And based on the language in that bill, Ethereum is seemingly a commodity. What do you think?
You know, I didn't have any input into that. She's too kind to me, but that's not me, right? Unless they referred to some publicly available comments I made. I didn't offer any private comments with regard to that act. With regard to Ethereum, I think Ethereum's a security. I think it's pretty obvious it's a security. It was issued via an ICO. There's a management team. There's a pre-mine. There's a hard fork. There's there's continual hard forks. There's a difficulty bomb that keeps getting pushed back. The difficulty bomb is going to wipe out the entire ETH mining industry. It's going to obliterate it, murder it, okay? The fact that somebody is able to murder an entire industry and then they keep changing their mind every 6 months about whether to do it or not do it is indicia that it's a security and not a commodity. For it to be a commodity, there can't be an issuer. And the truth is you can't really make decisions. I mean, one of the fundamental insights in the crypto industry is the fact that you can change it is what makes it a security. So if you look at most of these cryptos where they have hard fork after hard fork after hard fork, the problem with a hard fork is that changing the protocol means that some development team is making a decision. And if you can change the protocol in a material way, you can change the monetary protocol, right? A hard fork can change the issuance pattern or can change the value of something. And so that makes an investment contract under securities law. And that means it passes the Howey test. So what you want is a completely decentralized protocol where nobody can change it, even if they wanted to change it. So fundamentally, the problem with Ethereum is they keep changing it, right? From a securities law point of view, right? And there's a team of people that make recommendations. And if you want to establish yourself as a digital commodity, then you're trying to create something like gold in cyberspace. So for example, no gold miners in the world could change the physical characteristics of gold, right? If a government passed a law, I mean, they wouldn't send an email saying, oh, gold is now steel, or steel is now aluminum, right? You can't, if you can change the characteristics of it, right, then it's not a commodity, it's a security. And securities have a place in the world, but they need to be sold to the general public pursuant to a disclosure, full and fair disclosure. You want to take a company public, you have to disclose who owns the company, what are the risk factors, and that way people can make a decision. The problems I see right now, it's like, you know, you've still got the ETH locked up, and will the merge take place? Will it not take place? And then after it takes place, then the question is, how long is your ETH locked up? And then is there a staking reward? And what is that? And if there is a staking reward, it's probably a security. The head of the SEC has said on 6 different occasions that if you generate staking off of a crypto asset network, it makes it a security. You can't generate yield and not be a security. So, I mean, in theory, you can create another digital commodity, but you can't leave questions unanswered. Oftentimes people in the crypto industry, they think, well, we'll just resolve this by taking a vote. Taking a vote doesn't make something decentralized. If 51% of the people vote to double the supply, or like if you look at the Solana thing, Solend last 2 weeks ago, the fact that you can vote on something is proof that it's a security. For example, my company votes on things. Shareholders vote on things. When you take a shareholder vote, it doesn't make you gold, right? There's no way that the gold owners or the gold miners could take a vote and convert gold into aluminum, you see? And if I owned a bunch of lumber, I couldn't take a vote and turn the lumber into steel, right? So ultimately, the challenge with these things is the ability to do anything. If it's truly decentralized, then you have to release the protocol into the world and not change it, not even contemplate changing it. In fact, you know, that one of the big problems with all these proof of stake networks is, in order to get them to work, they have to keep doing hard fork after hard fork. And the reason they're doing it is because they're putting the security into the software instead of into the hardware or into the physics. If you're relying on the physics of the network with proof of work, then you don't have to keep upgrading the software. If you keep upgrading the software, then someone's got to write the software. And when you write the software, you end up with this exploding complexity. And then you have to keep changing it. And so this pursuit of functionality and performance via continual upgrade, that makes you a software company. And there's nothing wrong with software companies. I have a software company. I have more experience writing software than anybody in the crypto space. I've been in the software business since 1989. So I've actually seen what happens when you upgrade software every year, 25 years in a row, right? And, you know, it makes you a company. You if you're a company and you want to go public and you want to sell your shares to the general public, you have to do it with a registration statement. So that's the challenge in the crypto space, that really they're just all securities. And the problem with it is they're all securities trading on exchanges that don't have a license to trade securities, and they're being traded by management teams that haven't issued a registration statement, which means they're non-compliant securities. So what will happen? Nobody knows what will happen. I don't know what will happen, but what I know is there's a lot of uncertainty. So you're either a speculator or you're a venture capitalist, and you're waiting and to see what will happen. And Bitcoin is different because it's proof of work based. And ultimately, you know, there was no ICO, there was no pre-mine. Nobody could change it. Nobody wants to change it. It doesn't need to be changed, right? And so you would generally think, you got to think more like genetically, you know, like something that got released into the wild 300 million years ago, and the DNA is the same. That's what you're trying to do with a crypto asset network. You're trying to release a protocol and not change it. And so I think that it's one more point I'll make here, which is from an institutional investor's point of view, the point at which you consider trusting a crypto network is somewhere in the range of 5 to 10 years after people stopped changing it. I mean, I would say it's after if there's a hard fork to fix a fatal bug, maybe that's okay. If you're fixing a fatal bug, or if you're improving the network against a fatal security threat, right? Then maybe you can get past that. But if you're hard forking to change the functionality or change the performance, you know, change the block size, anything like that, where you're changing it, it resets the Lindy clock, and you have to wait for 5 to 10 years. After 5 years, it's risky. After 10 years, you think, well, maybe all that combination of protocols is going to work, right? And if you look at Bitcoin, well, they had the 21 million coins and the monetary protocol. It was set January 3rd, 2009, and on Pizza Day, around May 2010, it's still the same protocol. The thing's traded for nothing, and then it starts to monetize. And if someone changed materially that monetary protocol, you know, it calls into question, is the thing robust? Is it Lindy, right? And so if you keep changing the thing every 6 months, I mean, you can do it, but the problem is, A, someone changed it and somebody voted on it or did it, and that makes it a security. And if they've got a vested interest in it, right? You've got a management team and an issuer, and that means you can't be a commodity. And then B, you have to wait 5 years to figure out whether or not it's robust, right? And so you keep restarting the clock every time you push that back.
I have a different question I want to ask you. It's about the wider cryptocurrency market, but just a very short one in 60 seconds or less. Agree or disagree? Ethereum in the cryptocurrency market would be, out of all the altcoins, the most decentralized compared to the others, the most censorship resistant compared to the others.
I mean, I can't say that. It looks pretty centralized to me. Like there's probably something, I'm not going to give you an opinion on all of them, except they all are securities, right? I mean, I'll give you that opinion. There might be something there's 20,400 cryptos or 20,000 cryptos. There might be a half dozen that we can debate whether they're commodity, but none of the proof of stake networks and none of the smart contract networks would be in it. You'd be having a debate over proof of work networks, right? That have not changed in the past 5 years, right? That don't have an issuer, don't have a management team, don't have a foundation, if you didn't have a pre-mine, if there's no ICO, if there's no foundation, if no one's controlling it, if it's not changing, right? Then you can have a debate. But I don't think that Ethereum qualifies for that debate. I think that's pretty black and white.
Cool. I love the conviction. And just to piggyback off what you said prior, I know you're not the SEC. I know you just said there's risk with the other cryptocurrencies. Software is fine. It's just incredibly risky, so you're not interested. But you put out a tweet out the other day the whole crypto market besides Bitcoin right now is unregistered securities. What should happen? Should, some get fined, or should they all go to zero and start new? What's the solution there?
I don't know what the solution is. I think that the industry would benefit if the SEC and the CFTC put out clear guidance as to how you qualify as a digital commodity. For example, if you could submit, if you want to go public, you actually submit a registration statement to the SEC and you negotiate it with them. And over the course of 3 months or 6 months, when they grant you, when they approve the registration statement, you can go active, and then you're a publicly traded company. So there is a process by which you can take a company public as a public equity. If you don't get that approval, then you can't go public. You can't sell shares to the general public. So right now, the question is, if you had some crypto, the only crypto that's been deemed as a commodity is Bitcoin. That's the only one that I think is certain. I mean, everything else is a question. And the chair of the SEC said that on television a few days ago, right? So the question then becomes, okay, I think that my crypto is a commodity. How do I get it certified? Okay, there's no clear process. So if there was a process by which I could submit it to the CFTC or the SEC and get them to certify that it is not a security, that would be a step forward. I think the other step forward would be a process by which I could submit a stable coin to get it certified as a stable coin. Like there's a way you can get registered as an ETF right now with the SEC. Right? They deny or they grant. They've granted some ETFs. They've denied some ETFs, but there's a process. There's a process by which you can sell mutual funds and other investment funds to the general public. They can grant, but they can deny. So I don't see the process by which I can spin up a stable coin. And as you look at it, right, there's stable coins like Circle and Paxos, and they're registered entities in the United States, and they claim to be 100% backed by cash and cash equivalents. So that's one type of stable coin, but the SEC is not certifying them. The CFTC is not certifying them. There's no national certification. I think they've got money. They've got licenses from states. So there's no FDIC registration. There's no SEC, CFTC. I think that's frustration. Then you've got Tether, right, which is sitting in the middle, right? It's more opaque, popular but opaque, and the problem is because it's opaque, it's getting attacked. People are not so much. If people think they can wreck you, they'll attack you, right? I mean, it's kind of sad, right? I'm not a big fan of hedge funds and short sellers myself, but they will attack. And so they shorted UST and that worked for them. And so now they'll short Tether. They're not shorting Circle and Paxos because they perceive that they're not wreckable, right? Then you have UST, which some people thought was a stable coin. I mean, you could have called it a stable coin. They would add up, the market cap of stable coins. They added up Circle and Tether and UST. But when UST had $18 billion worth of value, the question is how much collateral was backing it, right? At one point, UST plus Luna was about a $50 billion ecosystem. And, they had $1 billion, maybe $2 billion. Did they have $3 billion in collateral? Somewhere between $1 and $3 billion in collateral against $50 billion of a float and $18 billion of a stable coin. Now, issuing $18 billion worth of a stable coin is like borrowing $18 billion from counterparties. So if you borrowed $18 billion from counterparties and you had $1 billion in collateral, you're levered up 18 to 1. Okay. On the other hand, if you borrowed it at 50% loan to value, then that means you have 36 billion in collateral. So you see the difference between having 36 billion in collateral, which is, by the way, 50% loan to value is risky. 25% loan to value, probably less risky for a volatile market. So in order to issue 18 billion in stable coin and use Bitcoin as collateral, then the right mix would be, I have $72 billion worth of Bitcoin, and I issued $18 billion worth of UST. Okay, and that's over collateralized, but still risky. So it's pretty clear UST was never a stable coin. It was a security. The point of the regulators when they say these, these cryptos need disclosure is, if you'd known that you were buying a token that had $1 billion in equity and 20 billion in debt, and that a 5% move would wipe you out, you wouldn't have treated it like cash or cash equivalent, right? You wouldn't have said, oh, this is like a bank account that yields 20% interest. You would have said something different. You would have said, this is extremely risky. This is like a 20x margin trade. And if Bitcoin trades down 6%, I'm going to lose my life savings. So there's no way right now to certify, to get like a national certification for a stable coin. If there was, it would drive a process, and people in the space would go through the certification process to get that. There's no way to create a certified crypto bank right now, right? The reason you had Celsius and Voyager and BlockFi as kind of uncertified, unregistered bank, is because the regulators they were loose with regard to cracking down, but they also didn't give a path to certification. Caitlin Long, has created a crypto bank, and she's been trying to get an FDIC license for 18 months. She can't get it. And there's no path, there's no obvious path to get the right license. But you can imagine if I was running an ETF and I said, I'm going to running a high-tech ETF and I'm going to buy a mixture of Facebook, Apple, and Amazon and trade it, and you were going to buy my ETF. Well, I would then post on a routine basis, like every day, or whenever I change my portfolio, I post what I own in the ETF. That's complete transparency. And if we can do that with an ETF, the question is, why can't we do it with another crypto? Like, why wouldn't you just say, okay, Tether, if you want to be certified, you just have to post everything online via this form, an 8K form. When MicroStrategy, when we buy Bitcoin, we file an 8K. It's an SEC filing. And if you go read it, right, there are very, very talented lawyers that very carefully write those 8Ks, and then they file them with the SEC, and they're online and they're legal documents. And the management team is legally liable for a lie, right? We're legally liable, the CFO, the CEO, probably the general counsel. And so you end up with adult supervision. And you end up with, since everybody's liable, the accountants are liable, they're worrying about it. The outside law firm is paying attention. There's an army of lawyers, there's an army of accountants. And because you do that, well, everybody knows where you stand, and then they can make a decision that's intelligent. We're lacking that in the crypto space. And there's no way for me to issue a token that's a security. There's no way for me to issue a public NFT token that's regulated. There's no way for me to get a commodity created that's regulated. Also, there's this issue of exchanges, right? Like either a DeFi exchange or a CeFi exchange. They're deemed as being unregulated. The reason that this SEC keeps denying the spot ETF of Bitcoin is they claim that all the crypto exchanges are unregulated, and there's no surveillance agreements and there's no transparency. But what they're really saying is they don't trust the exchanges. They think they trade against their own customers, right? So if you're buying a token, like let's say you were buying some random coin on an offshore exchange and you had a big order in. If that exchange actually was operating a hedge fund and they got your order and then they front run you and they bought that token, drove up the price, and then sold it to you, you'd be pretty irked, right? Well, so when the regulators are concerned about that, their view is there's just too many conflicts of interest. Right? Like how you could issue a token, own a bunch of the token, and then you could list the token on your exchange. The price would trade up. Then you could sell it, and then you could not tell anybody you did it. That's all totally illegal with a security, right? You couldn't do it. It's pretty obvious to everybody that is unethical. It is illegal. And there would be like 100 people that would tell you, no, you cannot do that in the traditional economy. In the crypto economy, you know, it's not even clear that they know that it's unethical and illegal, right? It's like sometimes people they just think that's just being creative. And so in this particular case, you've got a Wild West. And what needs to happen is it needs to grow up. Now, we need adult supervision. Now, let me just grant one more thing in favor of the cryptos, which is there's a tension between the 20th century and the 21st century. The 20th century is NASDAQ. You start trading at 9:30 in the morning, you end at 4 in the afternoon. You can't trade on the weekends, right? You can't take personal custody. That's how MicroStrategy stock trades. MSTR started trading in 1998. And there has been no material improvement in the way that that stock works on the NASDAQ in 24 years. Okay, so that seems kind of antiquated. And the crypto world is why can't I take custody? Why aren't there 500 exchanges instead of one NASDAQ? Or why can't I trade 24/7, 365? Why can't I do things faster? So the crypto world wants to go fast, and it wants sexy stuff, and it wants to do it in the palm of your hand, and it wants to do it everywhere in the world. And it wants to do it on a holiday, on Labor Day. Okay, so those are all admirable, right? That's 21st century technology. The 20th century technology as well, we've got the compliance down, and we've worked through the ethics and the conflicts of interest. And it's pretty clear to me, for example, that I have an obligation to tell all my shareholders any material thing that I do at my company that might impact their shares, right? That's pretty obvious to me. So we've got adult supervision in the 20th century world, but it's expensive and it's slow. And it's not functional. The functionality, there's low functionality, it's very expensive, and it's slow, right? In the 21st century, you've got crypto, which is very functional, very fast, but they haven't worked out the regulations and the protections for consumers. And so, you know, it's kind of hard to defend it if you watch $50 billion get torched and go to zero in a matter of 2 weeks. We can see why that's not so good. But what the world wants, the way this should end, you know, what you'd like to see happen is you'd like to see the regulators embrace the good that's come out of the crypto world while extending some investor protections that are common sense, like thou shalt not lie, cheat, and steal. These are not like from 1933 SEC Act. They're not 1940. These are like 4,000-year-old rules, right? Hammurabi's code, they're in the Bible, right? They go back to ancient times. The Greeks, the Romans, everybody had this idea, thou shalt not lie, cheat, and steal. So we need somehow to introduce those common sense guidelines into a modern technology framework. And right now, for better or for worse, it's the United States regulators, the SEC, the CFTC, the OCC. They have the control of this, and the rest of the world's going to follow them, right? And probably going to adopt their broad brush guidelines once they figure out what they want to do. And the industry is kind of in betwixt and in between. You know, we're out of the first decade, which is a lot of innovation, a lot of creativity, a lot of, you know, Mark Zuckerberg used to have on the wall of Facebook's headquarters before they went public. It's like, go fast and break things. Okay. That was the Facebook motto, go fast and break things. After they got public and after they became a billion user network and they had the power to change the course of democracies, I think they got rid of that motto, right? That, you know, at some point you can't go fast and break things anymore. So I think the crypto world is moving from its first decade, which is go fast and break things, to the next decade, which is let's try to keep, you know, the good that comes from the technology while we introduce it into the public policy framework that allows it to scale to the next order of magnitude. And if you're wondering, what do the regulators think is good about crypto? This is not a secret. They've said it out loud. They think Bitcoin is good. They think that proof of work, such that you create a digital commodity using energy and no issuer, is a good thing. It's an innovation. It's a brilliancy. Well, what Satoshi did, the creation of digital commodity in cyberspace, or digital energy, or digital property, if you will, or digital money, using energy and SHA-256 or some hashing algorithm, that's a brilliancy. So there's a place for digital commodities. The second thing they like is digital currency, like a stable coin. The world wants trillions of dollars of US dollars and probably digital euros and digital yen to move at the speed of light on mobile phones and on websites. That's an innovation. And we haven't quite got it right, right? We've got UST, which is a defective one. We've got Tether, which is successful, but opaque. And then you've got, Circle, packs that are struggling, and there's no FDIC approved bank that's issued a stable coin yet. So that's a new thing we're working on. And then I think they appreciate 24/7, 365 trading. Right, that's an innovation, which is clearly an improvement over the 9:30 to 4 in the afternoon, 5 days a week. The rest of the world doesn't necessarily take American holidays off, and Sunday's not a holiday in the Middle East, right? And so and shutting down the economy of China because you want to declare a holiday in California isn't the way to run a global ecosystem. So global access, that's another plus. And then the final thing is just the idea of crypto tokens, right? Cryptography, zero proof, and the ability to do things instantly in 100 milliseconds, right? That's an innovation. Right now, a lot of the world still approves wire transfers by talking on the phone, right? And that is about 10,000 times more expensive than doing it by signing with a private key. So all of those crypto capabilities, those are an innovation. I think all of those things together, plus just speed, like being able to spin up a token, whether it's a Tom Brady coin or whatever coin, being able to spin it up is an innovation. Now we know what the innovations are. And the question is, how do you merge that with regulation? And we'll see, right? We're waiting on that.
Yes. So let me ask you this, because I appreciate you, giving us your reasoning on this. I think we understand how Bitcoin is different from the rest of the market, and I think we understand kind of your thoughts on the cryptocurrency market as a whole. However, as I'm sure you know, not everybody in the world thinks like you. I believe there's a spot ETF in Australia, spot Ethereum ETF in Australia, along with Bitcoin. There's a spot Ethereum ETF in Canada, along with Bitcoin, multiple ones. And, Canada is, from what I hear, very, tight with the global financial regulators. So your best guess, do you think Ethereum and crypto at large will continue to grow and gain usership over the next 5 to 10 years, despite your personal thoughts?
Look, I mean, the only thing I'm going to advocate is Bitcoin. And that's the only thing I advocate. I'm not advocating Google stock or Apple stock or Amazon stock. I'm not even advocating my own stock. Like, to be clear, like, I'm an equal opportunity, ambiguous analyst with regard to property. I'm not going to tell you to buy property in New York City or Moscow or Los Angeles. I'm not going to advocate a trophy asset or a collectible. I'm not going to advocate or opine on any other crypto. I don't know how they will end. I'm open-minded to the sense that it's possible to create things, but there are many, many different ways to do it. Right? I mean, there's a lot of ways to create functionality, and there's a lot of models. And I think there are a lot of different countries in the world. Right. So different countries and different regulators will have different opinions, and different management teams will do different things, and stuff will happen. And if you want to have an opinion on silver, I think you should study silver for 10,000 hours. And for someone to have an opinion on Ethereum, they should study that for 10,000 hours, and you can take their opinion if you like. My opinion is clearly the least risky thing, and the purest thing that's come out of the crypto ecosystem is Bitcoin. And the reason I advocate it is because it's property and not a security. And I'm not going to advise you to invest in any private company. I'm not going to advise you to invest in any public company. I'm not going to advise you to invest in any of 20,000 other things. I think that that those are all individual decisions that people have to make. And I would willingly grant, like, maybe the best investment for you is to own a ranch in Kansas. People do well, or own a bunch of lumber, right? Or own an oil well, or own a natural gas facility. There's a lot of businesses that make sense for people. And, you know, if you have proprietary knowledge about it, and you have strategic assets and interest in it, and it fits with your family, you know, your citizenship and your long-term intent, right, to live wherever you're going to live, then I think you do that thing.
But you know, cryptocurrency is global, right? It's not just in the U.S. So even if U.S. cracked down hard from a regulatory standpoint, you know, presumably, like Raul Paul says, maybe they just go offshore. So if you had to just, I know you're not advocating for it, but best guess, do you think crypto will continue to grow and gain usership in 5 to 10 years?
I think that that what's going to happen is digital property in the form of Bitcoin is going to grow. I think digital currency in the form of the dollar is going to grow. I can't be sure which network, but I think that the overall digital currency network will grow. I think that other digital currencies will grow as well, but much less so. I think that the dollar is the king winner, and I think the euro maybe number 2, and the CNY, and then all the rest will be small. And I think that ultimately the currency, the digital currency, will eat into fiat currencies. The digital property, Bitcoin, will eat into properties. It'll eat into gold. It'll eat into real estate. It'll demonetize other corporate bonds and stores of value instruments over time. I think that there'll be a lot of innovation in other areas, but again, like most of the proof of stake networks, they're all companies, right? And so they're private companies. And if they can come public, maybe they'll be, you know, the next Google or the next something. But the way I think about them is I think of them as technology ventures, a la Instagram or Snapchat or something like that. And you manage your risk accordingly, right? I mean, do you trust the people doing it? Do you understand the regulations? Look, most of them are non-compliant right now, but Uber and Airbnb were non-compliant too, right? Like Airbnb is like illegal in half the places they operate, and Uber is. It's what happens. Who knows what happens, right? People tend to get very sensitive when money is at stake, as opposed to other things. But people are sensitive about a lot of stuff. So if you want to invest in technology, then you go and invest in technology, but just keep your eyes open about what the risks are. And I generally think that the most important thing, though, is the regulatory risk is huge if you're going to move money around. And the reason that Bitcoin works is because the use case is property. I'm buying a block of money, I'm holding it for a decade, and I'm not moving it around. At the point that you want to move the money 1 million times an hour, and you want to move it to 1,000 or 100,000 counterparties, you start to cross into other regulatory jurisdictions. Right now, you're dealing with the Treasury and the OCC, and you're dealing with tax issues and the like. So if you're going to get into those use cases, the big question that everybody in crypto has got to ask themselves is, why is it that Google hasn't already done this? Because Google has more money than God. Why has Amazon not done this? Why has Citadel not done this? Why, why has Apple not done this? Why has a centralized company running in Silicon Valley not done it? They all have infinite money. They all have infinite programmers. And if the answer is because they thought they get shut down by the regulators, then you have to figure out how you're going to deal with that. Right. And if the answer is they could do it, then the question is, do you need a token or not? The challenge with funding anything with a token is a token looks like equity. If there's a management team and it's giving the token to itself or it's selling the token to an investor, it's equity. And equity is a security. And securities could be sold pursuant to full and fair disclosure. And there's always a bunch of laws around them. So that's the thing you got to ask yourself. It's if you're actually ducking all those rules, then you got no competition. And the reason you have no competition is because it's illegal and unethical, right? So you got to make sure that you work out the law and work out the ethics. And if you're an entrepreneur in the crypto world, and after that, if you're an investor, you just got to have a very, very thoughtful opinion about what is this thing I'm investing in, and how is all this going to work itself out? Right now, it's just a very murky world.
Final questions, Aaron?
Definitely. Michael, I'd be remiss for my own community if I didn't ask you this. Please, share as much or as little as you want. And I ask you this because recently Charles Hoskinson, founder of Cardano, just spoke in front of Congress regarding fair cryptocurrency regulations. Now, this question I would ask you is not about regulations. It's not about investment, but you're a tech expert. So from a technology point of view, Cardano versus the rest of the cryptocurrency market, what are your thoughts?
I don't have any opinion on Cardano. My opinion is Bitcoin is a digital commodity. I think that all the proof of stake networks are securities, and they're all very risky. So, but it's above my pay grade. The regulators will decide whether or not they allow them to continue or whether or not they don't allow them to continue. Technology won't save you, though. Ultimately, if you're selling a security to the general public without a disclosure statement, the fact that it's technically advanced won't save you from the securities liability. So I would say technology is not an issue. I think they're all going to compete with each other, one shape or form, but all of those things could be done on a layer 2. You can build those things on Lightning without a token, or you can build them in Cash App without a token, or you can build them into a simple exchange. I mean, Coinbase and Binance are exchanges. They can do high-speed trading. Citadel does high-speed trading. You can do all those without a token. So when you start to get into this issue of what can I do with the token, well, that's interesting, but the token is a liability if it's not a commodity. And so fundamentally, this all comes down to an issue of, can you establish your network as a commodity network? And to be a commodity network, there has to be no issuer, no ICO, no central organization. And if you study the history of Cardano, it's pretty obvious. It's a security, it checks all the boxes. So I don't know how you actually get around intellectually to convincing yourself that it's anything other than a security. And the question is really going to be, how will the securities regulators deal with crypto networks that are based on security tokens? I don't know. It's not my business. I'm not in the business. I will leave it to other people.
I tried to steer away from the regulatory framing of that question. You brought it back. Totally fine. Question for you, Mr. Saylor. We're past our allotted time with you. Do you have a little bit more time? If not, I'll ask you my final question.
Just a couple more minutes.
Couple more, just 2 more questions then. Okay, maybe we'll try for some fun ones. How close are you to Elon Musk? I feel like he bought Bitcoin through Tesla because of what you did before him. How close are you to Elon Musk? And have you ever talked to him?
I'm not going to comment on my relationship with people.
Okay, that's fine.
So.
Now, Michael, this is another one where say as much or as little as you want. top 3 altcoins for the next bull run.
Bitcoin, Bitcoin, Bitcoin.
All right. And then I guess just final big picture question, give us some general advice. What do you think is the best way to survive a Bitcoin bear market?
HODL.
HODL.
Very simple strategy, dollar cost averaging. If you have extra money, you want to save your money, buy your Bitcoin, wait. Anything more complicated than that is like trying to time the market. And Warren Buffett doesn't time the market. John Bogle didn't time the market. 95% of the people that try to time the market underperform the market. Odds are against.
Bitcoin price prediction within this decade, within till 2030.
I'm not going to give you a price prediction in a near period of time. I think it's going up in value and it's going to be volatile.
Michael, I appreciate you playing ball with us. You know, we ask you this stuff because this is what the people want to know. This is truly my final question. This comes from the audience. MicroStrategy is a data analytics software company, correct? Are you guys looking into incorporating blockchain or distributed ledger technology into MicroStrategy software and services, or providing analytic services for popular blockchains?
Most of our business is selling business intelligence to large organizations around the world. Like banks and governments and retailers and the like. We do have a small team working on Lightning development, and we're working on enterprise software that has Lightning, the Lightning protocol embedded in it and Bitcoin embedded in it for cybersecurity and marketing and other sorts of authentication and enterprise applications. So we're excited about that. We'll see where it heads. It's an R&D stage right now.
Sure. Like, I'm sure you've been probably following what's been going on with Nick Carter. Bitcoiner disclosed his investing in a company that does service for multiple blockchains because that's what their users are demanding. If your users demand analytics for other chains, do you think that would be a possibility? That's just a service you could provide in the future.
Yeah, we just sell our software to anyone in the world that wants to analyze anything. Right. And so generally what happens is we sell the tools. It's like Oracle database where you buy the Oracle database and you put what data you want in it. So we sell tools and then people use it to analyze anything. So I imagine pretty much every type of data in the world is analyzed because there's hundreds of thousands of applications built on our platform.
Appreciate that. Michael Saylor, thank you so much for coming on today. Links to all Michael Saylor stuff down below. Follow him, check him out, you know, look into Bitcoin. Michael Saylor, final thoughts for the Altcoin Daily audience.
I think the industry is going through a transition right now, and the safe haven is just take a long-term view toward Bitcoin with the money you want to save for a long period of time, and then everything else is just going to be much more challenging. Right. The shorter your time frame gets, the more difficult it is to make any right choice. And if you move into investments in tech companies, or any other sorts of investments, then I would just say you need to focus like really, really hard on all of the risk factors around those things. And I guess I would still say you kind of got to take a long time frame right now because there's just so much turmoil in the market, driven by macroeconomics and political economics. You know, it's not clear what will happen 12 weeks from now. So, you know, settle in and take the long view.
Appreciate you, Michael. Thank you so much for coming on.
Yeah, thanks for having me.